Mark, welcome back to the show.
Thank you, Sam. Two-timer. I need a jacket or something.
Yes, you do.
Thank you for having me back. I'm honored.
The jacket you've got on is very nice. Welcome to Topline, the podcast for the best founders, operators, and investors in B2B tech. Every week, AJ Bruno, Asad Zaman, and me, Sam Jacobs, will break down what's important for you to know to be the most well-informed professionals in the market. What do the revenue leaders at Google, 3M, IBM, Shopify, Square, and Cisco have in common? Their teams all use SalesLoft to hit their number. SalesLoft is the only platform that's designed for the way revenue teams work every day, so sellers can prioritize and take the right actions to get more deals done. From prospecting and deal management to coaching and forecasting. No more guesswork, no more wasted time on non-selling activities. Follow SalesLoft on LinkedIn to learn more. Hello, everybody. Welcome to Topline, episode 56. Sam Jacobs, Asad Zaman, AJ Bruno. Today, we've got a very special guest, a friend of the pod, his second time. I think the only two-time, actually, besides Peter Walker. Peter Walker's a two-timer, and Andrew's a two-timer, and Mark Roberge is now a two-timer. Founder and general partner at Stage 2 Capital, former chief revenue officer at HubSpot, father, resident of Marblehead, Mass, runner, nice person.
Good
author
hair.
of the Sales Acceleration Formula. Mark, welcome back to the show.
Thank you, Sam. Two-timer. I need a jacket or something.
Yes, you do.
Thank you for having me back. I'm honored.
The jacket you've got on is very nice. We're gonna. Yes. Well, we're excited to have you. Asad, what are we talking about?
A lot of AI. We're going to talk about AI because it's my favorite topic to dig into these days. And I get to have an episode where we spend a lot of time on it whenever Mark joins us. So I'm super excited. Mark, I guess the place to start, we always like to start with a framing type of question. And last time when we spoke, we were really in the early days of AI. And it was so much fun to extrapolate based on the signals we were seeing where we can go. And now it's been close to a year, right? Like almost a year since that time. And we're starting to see some practical implications of AI in organizations. I think the two most powerful implications I've seen are on software development, where it has genuinely made software developers a lot more productive. And this is without things like Darwin becoming mainstream. So even just with the co-pilots, the productivity uplift is significant. The other side that has been really interesting is on customer service. Klarna implemented their chatbot. It's had a miraculous impact on the productivity of that team, the headcount needs of that team, the quality of service as well. So we're not diminishing the quality of service for productivity. It's actually better for the customer for what are considered like level 1 service needs. And then you can escalate to a human being if you need to. But you're so on top of this space and you're looking at this a lot more than we are. What are you noticing? Like, other than these two things, are you seeing other interesting implications that early adopters are benefiting from that we can maybe share with the audience and make more mainstream?
Not really, which is surprising. So like, I think those are the ones I would have picked. And a year ago, that's something that was different. Was I think we all thought the SDR team would be one of the first. And that's one that's dramatically shifted for me in the last year. I've looked at a lot in there and attempted to, get pilots going in our LP-based companies, our portfolio companies. And I think I'm less bullish there largely because of the legislative barriers of the robocall legislation that like, unless you have an opt-in, you have to have a human call. And so otherwise I think we'd be good.
So you think technologically we can do this, but we actually, regulation is going to hold us back from actually making that mainstream?
Well, we have to define technologically do this, like, in the full gamut of the SDR role of like identifying an account and, doing research on the individual, creating a 17 sequence personalization, and executing at the right time, albeit knowing that this is probably a 22-year-old football player that just graduated college. I probably just offended a million people right now. But like, this is like this is an entry level position. Okay.
That would mean a million people were listening.
I think technologically that's doable. I think the most challenging part is actually if someone actually picked up. And then the second probably is if they responded through another mechanism. But who cares? Like we can bring humans in potentially there. But I just think like I think what some people refer to as the watermark trend, which means legislation may, for security reasons, and I think these are legit, may require that AI identify themselves as AI. And so when you're do
you think that kills everything?
Not everything. I think like if you, Sam, I'm probably more bullish on the simpler SMB full cycle sale being disrupted than I was a year ago compared to this SDR. Because if you go to like a website and you're like, okay, I just want to like get a couple questions answered, and you had to choose, kind of like the PLG movement, right? It's like choose between like waiting to request a demo and get someone versus like, probably like a much more sophisticated version of intercom or drift where it's like it comes up and like, hey, how can I help you? And like I've seen some really cool demos of stuff that gets pretty close where it's like literally like an entrepreneur. This was the coolest meeting I had. She was raising and she was like, I'm going to have my bot pitch my company. It was sick. Like she was like the bot and I had booked the meeting. We had gotten introduced like less than 12 hours prior. So there wasn't like a week.
That's a high pressure.
Yeah, there wasn't like a week to tweak the algorithm. She had fed it some information on me. Obviously the bot was already trained on our company. And it was a sales, like it was meant to be an AE displacement type play. And I was like, wow, this is crazy. And I was like, okay, tell me about your business. Give me the elevator pitch. What do you think about defensible moats? What's the TAM on this business? And it really did well. And it was like,
Did she get a term sheet right at the end of the
which is too bad. She's an amazing person and like a great company. I don't want to really disclose it, but like, it was just it was more of like an us business model thing. Like I think a lot of entrepreneurs don't realize this is a real thing, but like you have to remember we have investors too, right? And we have big investors that have lots of money and we fit into a Rolodex of portfolio of VC firms. And if we say that we're investing this much money at this stage for this much percentage in this sector, and we navigate from that often, that upsets them because they already have that fund elsewhere, right? So like it was more of an us thing as to how the deal was set up, but
how are these deals being valued, Mark?
All over the place and crazy. And I think Sam, like finish. Well, I'll let you finish on that in a second, but like all over the place and crazy. I am starting to see over the last 4 months the start of the trough. The start of like oh my gosh, why did we do that deal at that value? It's been 18 months and they don't even have a customer yet.
Mm-hmm. Oh. I was going to correlate it. I was sorry, AJ. I was going to correlate it to SaaS multiples and just like still trying to think about like for me what is the right, to your point, what's the TAM, and how does it get valued? Is it just recurring revenue and it's 6 times because public tech companies are being valued at 6 to 8 times ARR in the public markets? Or is there some other valuation? Because I'm still thinking about all these growth equity companies that have, 1,000 people, 200 million in ARR, are not growing very much and are underwater on their unicorn valuation. And what the path is for this cool avatar company, but is it still fundamentally depressed by public market comps that still don't look great?
Yeah, there's a lot in there. I would say you kind of drew a parallel to SaaS. I think like investing in SaaS today it's good. It's exciting. It's like, I feel like the prices are relatively fair. I feel like they're, very good to be an investor in, ironically, the B and beyond roles. There's just a lot less competition there right now and some hesitancy. And I think they're still figuring their stuff out. And a lot of folks have gone downstream. I don't know if there was some like big pitch book report that came out and like everyone's trying to be an A investor and a seed investor. So there's like, I don't think they're nowhere near where they were priced 3 years ago, in 2020, 2021. And I think they're priced fairly, but there's a lot more competition there than there are in the growth rounds, just in general, and like SaaS, B2B software, whatever. And Sam, you're asking about like the AI stuff. The AI stuff is still insane. It's like specific data points. This week, and this one was not crazy, but it's like 2 co-founders of businesses that are very well-known unicorns. I'm not going to disclose them. You'll probably read about this in a week. Different unicorns that they co-founded are now coming together. One is an awesome sales and marketing leader, and one is an awesome CTO, and they're building AI for market automation. And that is priced, again, this is like 2 people that probably sat down a month. I don't know what the details are, but it's not far from they sat down a month ago to decide to build a business, and they have like a deck. And it's priced at $9 million. They're raising 9 on a 25, I think. And that's a competitive deal.
Wow.
Okay. I have a student out of Harvard undergrad who's been tinkering with something in like the more the DevOps layer of like kind of like checking if your algorithm's accurate or has bias and leaks or whatever in the AI sector. And he has like a beta customer and he's raising 10 on 80. I have.
Isn't anybody telling him not to do that? Like maybe keep them upside?
I mean, I think like you're absolutely, Sam.
Sure,
like there's flavors of that, and I think like there's AJ, you raised a lot of money at a big valuation back then. Anyway, no, but like AJ did it right. AJ did it right, and so did David Cancel and Elias, which is like you can do that. Like there's dangers to it, obviously, even if you do it right. But obviously, the Ron to do it is do that and then say, okay, we're gonna do 3 million this year, 12 million next year, and 25 million next year, and hire 100 people this year and 1,000 people next year. Like that's what most people do, and that's Ron, right? But like what AJ did and David Cancel and Elias at Drift did was, okay, fine. Like, thank you for the honor and the bout of confidence. But this doesn't mean that we are going to like use capital to drive our growth trajectory. We're going to continue to use the tea leaf signals of the business to drive how fast we can grow. Right. And so as long as he does that, it's not that bad of a thing.
I strategically sent Mark my board update right before this call, so he could. It was a good one. The real on the business. Mark, I was going to jump in. You mentioned your LPs and your investors. You coincidentally have an LP meeting next month, and there is a ton of energy around it. By the way, a lot of I don't know if you know
it's oversubscribed. It's great.
But a lot of people, people have like reached out to me like, hey, are you going to Boston? I'll be there. I think everyone's just really excited to get in the room and tell you how wrong you were last year when you said their jobs were going to be replaced in 12 months.
I said 12 months. We got to go back to the tape. I think I said 10 years, but like, okay, yeah.
I think, I'm kidding. The reason I'm saying that is I remember there was so much discussion and conversation around your GTM AI. It was like lightning in a bottle. So it was, I'm really looking forward to it when what you have on tap.
Yeah, I'm going back to that again this year with like a year later. Seriously, because like we did it so we have an LP meeting in the East Coast in the spring and one on the West Coast in the fall, and we're coming back. So I'm going to redo it based on a year's worth of learnings. And this is relative to your question, Asad and Sam. Like, and I did it in November in our West Coast LP meeting. That was at Salesforce Tower. I was talking about like sales tech disruption and innovator's dilemma, and was talking about like, hey, remember, one of the things I do in speeches now is I'm like, hey, let's just remember in 1995, 80% of the CRM market was owned by 2 companies, Siebel and Act. So raise your hand if you use CRM, and like everyone's hand goes up. And it's like, raise your hand if you use Siebel or Act, and every hand goes down. And I'm like, this is real. This is real. Innovator's dilemma when we go through major tech disruptions. And what was very cool about that day was my keynote speaker at the LP meeting, who I did a moderated QA with, was David Schmeier, who is currently the chief product officer at Salesforce. He was the founder of Velocity that he sold into Salesforce. But what was really cool is he was the co-founder of Siebel with Tom Siebel. So we got to have like a really cool discussion about this historical arc. And so we'll be doing this in a couple of weeks here at MIT, and I'm moderating a Q&A with Brian Halligan. So we'll see what he has to say about it.
Mark, what are some of the big learnings that you've had since you had that last LP meeting? AJ is right. It was actually quite a conversation in our ecosystem. All these LPs came out and there were all these emotions around it, excitement, fear, all of it. As you've continued looking at the market and seen the adjustments that have happened and not happened, what are some of the big takeaways for you, and how has this changed your thinking about the near to medium term impact that we're going to see?
Yeah, it's great. So when I was talking to y'all last time, I was saying, I have this idea, and this is what I launched at the East Coast LP meeting in May of last year. I was like, I'm going to go in front of the group and say, hey, you're all running the sales orgs at Zoom and Atlassian and Snowflake and all these awesome orgs, and I know you're under a lot of pressure to do more with less. How many of you are including AI as a way to do that? And like so many hands went up. I'm like, great. All of you email me, because I'm seeing a ton of go-to-market AI tech that you should pilot. And then we could kill two birds with this one stone. You can like improve your numbers.
No one wants to pilot.
Exactly. So you can improve your numbers, and I can get a first glimpse at the winner and almost make the winner. So 110 people said yes. So I went out and we can go bring up the LinkedIn post. I was like, hey, I got 110 CROs from all the biggest tech companies in the world that want to look, if you're building go-to-market AI tech, they want to look at it and meet with you. And so I got 250 applications in 2 weeks. And so I got a really good canvas at that moment of like what was being developed in go-to-market AI tech. And it was like boring, honestly. It was like a lot of the SDR co-pilots, really commoditized stuff like forecast AI models, stuff that I wasn't really excited about. But anyway, we found some good teams and some interesting stuff. And every Monday and Thursday, we promoted 4 of them each of those days for about 8 weeks to the LP base. And I was shocked. I mean, I think 50 meetings got set up, but only 2 pilots and none of them rolled out. And I went back to the LPs. I don't know if I told you about this. I don't think I did. And I was like, what happened? Like, you told me you were like, and they were like, yeah, I was super excited about it. But once legal and IT found out about the pilot, they shut it down. They said, we aren't ready for this because we don't have an IT, like an AI security policy.
How trustworthy is that? Do you trust that? Like, do you believe that? Because I was at a dinner a couple of months ago, a couple of quarters ago now, actually. And it was a bunch of CROs, great CROs. And I asked how many people are actually using AI on a day-to-day basis. 2 people put up their hands. And a bunch of these people hadn't even made an account on ChatGPT, like step 1, right? And so I understand that legal has an opinion on this, especially in larger organizations. But I also feel that a lot of the CROs out there are academically interested in where this might be going, but they aren't even like reading up on it, looking at it, monitoring it. They're a little bit skeptical about it, maybe because they're a little bit scared about it. So how much of that is an excuse versus real?
You're probably right. It is. And aside from my learning, it doesn't matter. The bottom line is it's not being adopted in large companies. Whether it's the C-suite not educating themselves or the red tape that's put in place. And that's meaningful for me in terms of my investment thesis and how I go after this.
How so?
Well, because I'm like, all right, great. Hey, if the big companies don't want to be early adopters of what is potentially the technology of our generation that has potential to completely rewrite the cost to build and sell software, then that just fuels more rapid disruption by the greenfield and AI native companies to disrupt. So then the minute I realized that, I reset our focus on getting our portfolio to adopt this stuff.
Interesting.
And that's gone better. That's gone better. I think it's way slower than I thought even there. And for different reasons. It's more like we only have 2 BDRs and like I don't have an ops person. So now I'm like working on like there's some consultancies that will do it. And we've had some Some good success. You've done
Mark,
one, AJ.
We're piloting.
Exactly.
We're doing one actually with I won't name the company or disclose, but Mandy and Anu.
Why won't you name it?
Yeah,
because stage 2 is involved, but there's like
it's just a tech that you're using. Why are we so secretive about this, AJ?
No, because they made the introduction, and like I'll disclose it and later episode. I'm being careful. I was told very carefully when I texted with Liz about different things of what I could and could not disclose. So,
what do they do? What is it? What's the use case?
The use case is really around data hygiene. And
I think that's a core use case.
That's the core use case for the starting aspect of it, of data enrichment,
data hygiene.
Lots of companies have been like very data hygiene in like the in that bucket. So we are piloting one of these. Here's my point that I was going to make. Mark's right. This isn't a CRO issue on adoption. It's absolutely a company enterprise IT issue.
I disagree.
And also, this goes back to my point. Of why it's so hard.
Mark's got the actual data.
No, I don't know the data on why the reason.
How extreme AJ's statement of that. Mark had a lot more room in there for it to be a little bit of this, a little bit of that. AJ was like, it's not this, which I disagree with.
I think it's really driven by how much we've put barriers to adopting software in organizations, and AI has made it very scary for companies to put lockdown on a lot of their own data. We talked about this where I just said like SOC 2 Type 2, sure, there's sensitive data, GDPR, all of these things are things that you have to build maturity into your business. Now, you have a 90 million, 80 million pre-money valuation of a company started a month ago. That takes years to build those provisions into the company. I know this firsthand. And I just think that a lot of these founders are just going to underestimate in that 4 to 12 to 24, 30 million of revenue, where 10 years ago, you could go 0 to 30 million in 5 or 6 years. Today, it is monumentally harder to do that. And we all know this.
Can't disagree with that, Asad.
I can. Let me try. Give me a shot. Okay, I can try. I think you're completely wrong for the following reason. I think you're right, obviously, but here's the nuance in this. Today, it's really hard to drive revenue growth because of the interest rate and the state of the market. I think when you think of 30 million, 40 million, 50 million, we have to extrapolate out a couple of years down the line. Interest rates are down and the AI agents become more mainstream. I think people are underappreciating how powerful AI agents are. Like, not just, can you give me the answer to this silly question, but a thing that can reason and do multiple steps in a complex process, that really changes the game for how quickly you can validate product market fit, how quickly you can expand into a market. And at the same time, you've got co-pilots right now that are going to advance and become a lot more powerful, that make it so that the blocker from building something like a compound startup, like a rippling, the constraint is capital. That constraint becomes less of a constraint in the next couple of years. So I do think that you will find companies that jump up to 30, 40, 50 million in revenue at a pace that we haven't seen before. That has to be one of the promises of the technology.
Well, we have seen some level of that. I think there's some companies, of course, OpenAI themselves, but even like the tool that I mentioned to you, Mark, which is Clay.com, has found product market fit. Oh, is it Clay.com?
I think it's Clay. Maybe they
buy
did.
Clay.com?
Yeah, cool.
I'll tell you, I thought it was super interesting that Kyle Coleman went from being CMO of Clary to CMO of Copy AI. Yeah. And I can also tell you that we're using Copy AI in a bunch of different workflows.
You guys, Clay.com, they must have changed it. You got it.
They bought it for $30 million or whatever.
Sure. Just invest in
that was one of the things in the bubble or whatever of ZERP environment. I consistently heard founders say the best use of VC capital was getting the domain. And I just wonder if that's still true. Chief, though, Lindsay and forget the other woman that started Chief. She's like, got chief.com. That made all the difference. That feels like a ZERP phenomenon, like the emphasis on the domain.
Mark, bringing it back a little bit, something that you said last year that was interesting. We talk a lot about CAC and how CAC has moved in the public markets. And you had made I don't say declaration, but a comment around how that would bring CAC down. So related to your kind of wrong about the adoption speed, I'm guessing there's some level of correlation where that's not
none of the stuff we're talking about is happening. And I'm not surprised about it. These are the potentials. I think we have to go through the hype curve and the crash, and then you get the sustain. So if I had to guess, and the timeline here is hard. If we look at the internet, I think the hype curve was probably like, it started to bubble up in say 97, 98, and it crashed in 2001. So we're talking about like a 3 to 4 year hype crash. Then we went into this frozen time from like 2001 to like 2004, where people were like, why are you working at an internet? That was like so 1999. Like, why don't you just go back to McKinsey where real work is done? You know what I mean? Like, so you have this like, and that's the time where it's going to be exciting, because that's when like Google, Salesforce, they're built.
I feel like that time will be compressed.
I agree, Sam. It could be, right? That's the internet. And then you had this like beautiful time from say 2005, where then it was like, oh my gosh, these companies are doing well. Like, this is interesting. And then it was like game over 2010. All of a sudden, like BCG and McKinsey were printing money from the incumbents, being like, we need a cloud strategy. Like, so it's like, and we had this beautiful 15 years. So I agree, Sam. There's tremendous arguments that could be compressed because AI promises faster execution. It hasn't really happened yet. So all the stuff we've talked about, AJ, in terms of like what the world will look like, I think we need to go through the hype, the crash, and then the frozen, whatever it is, year, and then the sustained time. And it's the frozen year is the time where it's going to be so exciting to build an AI company.
When you say crash, are you talking specifically for AI, or are you saying for everyone?
AI.
All over
I mean,
again,
I don't know if it will have a macroeconomic. My guess would. I'm not an economist, so I'm not qualified to talk about this. But like my individual opinion is, it doesn't look like it's going to be macro like it was in the internet. I think the problem with the internet was these companies that had no revenue, no business model were public, with like our grandparents owning stock. That was a problem, right? And we also had like, 9/11 in conjunction. So there's multiple things happening, and, obviously there's wars going on now too, which is scary. But like, at least this AI bubble has not hugely crept into the public markets. And it would be a crash in like whatever VCs leaned in heavily, so a little more contained.
Yeah.
But I think like to your point on the CAC, AJ, we haven't seen it happen, but what I don't understand is like, I guess I'll say two things. First off, just in general, I've continued to have conviction for a lot of the things we were talking about like last year, like this will follow a hype curve, and things are very overvalued, all that kind of stuff right now. I think like the things that I'm like surprised about are, one, I've never had like I don't think the entrepreneurs are thinking far enough ahead in the vision they're painting. Like, I don't think people are asking themselves, looking themselves in the mirror hard enough to say, like, am I just working? Is it like 1997 and I'm just working on an on-premise company that's going to be totally irrelevant in 5 years when I'm supposed to exit? I don't think people are saying that hard enough. And what I want to be hearing from more entrepreneurs is, I don't know if this is feasible, but it's like something like, just as an example, like, oh yeah, I'm just going to build Workday, but I'm going to have one employee. Like, I'm going to use AI to like build and sell Workday. So if whoever's spending like $100,000 a year on Workday, I'm going to sell it to them for $8,000 and have a really good business. Just because of the pure cost benefits. And if I start at the ground zero, I have a better chance. Now, that's an exaggerated example, but that could be one. The other thing that I think is, just to finish that thought, AJ, real quick, is just like, I think there's like, we really need to be beachhead phasing this thing. And the example I gave at SaaStr, and I give to inspire folks, and it is a consumer example, but I think it applies to B2B too, is like, is Amazon and Bezos, right? So it's like, you're Jeff Bezos, it's 1996, you're a hedge fund quant guy, and you don't quit your job to become a book salesman, right? You quit your job because you think in 10 years, people are going to buy food and furniture and, everything online. The world's not ready for it, but you believe that. And so you're like, okay, what can I sell today that they will do that? That's really important strategic question number one. And really important strategic question number two is, as I build that, how does that help me behind the scenes build a moat so that when the market and technology opens up, I catch it and the incumbent doesn't? And so he lists a bunch of products, and he's like, oh, books, like 1 million new SKUs a year, highly profitable, and consumers are ready to buy it online because it's a book. And
constrained by retail
exactly, and they can take advantage of long tail. A lot of reasons why, and so that's question number one. What can I do today to create revenue on it? And number two is I build a decentralized warehousing infrastructure in really cheap areas of the country that Walmart's in because there's no foot traffic, with a delivery mechanism so that when people are ready to buy food, furniture, and clothes online, I can win it. And Walmart does not. And that's the picture I want to hear from entrepreneurs, and I don't. And it's kind of like the stuff that it's weird in a way that I feel like the AI technology that will most impact companies today, like what you're doing, AJ, are not the companies I should be investing in. That's different. Like, who's going to help my startup the most today do better at sales? I think that's a different company than who I should invest in, and it might be the future Salesforce and HubSpot.
That sounds like it's an issue or concern with the experience of the founders and entrepreneurs, that they haven't seen enough cycles of real business work to be able to go paint that bigger picture. And I assume that a lot of the AI pitches that you're seeing are first-time founders that are super excited about the technology. And it's like, well, you spent 5 years as a senior AE at a Notion or a scaled company, but you just truly don't know what the business could turn into really 5. That's
the key question I'm asking all these board meetings is this is all great. Good job. Nice quarter, the TAM, et cetera. Can we just talk for a second? Let's imagine a post-AI technology rollout world. How is this problem that you're solving today solved? Because that's what matters.
Hey there, I'm Jesse Shipman, CEO at Fluency, and a big fan of Topline. If you're a CRO or sales executive, listen up, because this is something you won't want to miss. Mark your calendars for June 6th and head over to Boston for the Pavilion CRO Summit. You'll get to hear from top-notch practitioners like Mark Roberge from Stage 2 Capital, Hayes Davis at GradientWorks, and Aaron Bates of Crossbeam. They're diving into the essential topics every GTM executive needs to dominate in 2024. Register now at joinpavilion.com/CRO Summit and use the code TOPLINE to receive 20% off your ticket.
I think the two challenges that I feel with that is that a lot of the advisors that they go to get advice on how to structure the deck and the conversation points to raise that first round are giving them advice based on the old world, right? And so I've actually spoken to a founder who said he was advised by somebody credible that this beachhead as a short-term strategy for this long-term vision isn't the right approach, and you have to go and paint this other picture. And it was horrendous advice, right? So I think the advisory network is also maybe in this instance laggards and not early adopters, and hence how do you paint the picture? The second is just so hard to extrapolate out as to what that world should look and feel like. And so you try, but it's so easy to poke holes into it.
Totally.
So when you try it with a friend, with somebody else, with potentially an investor, it's just so easy to break it apart, and your heart breaks, and you're like, okay, let me take this safe approach.
I was at this M13 summit yesterday, and Brad Burnham was there, one of the co-founders of Union Square Ventures, and he was very declarative. He said, well, everybody's going to have a series of agents and bots that sit between them and end experiences, and the bots are going to go out and find specific targeted recommendations, and so there's going to be no advertising in the world because you're going to bypass all the brands. Well, no, but I don't think that's true at all. My point is I don't think we know, because if somebody was to say, well, I'll give you this agent for free, but in exchange you have to be served up ads, and by the way, the ads are going to be highly relevant to what you might want or need. Are you willing to do that? I mean, that's the entire business model of the internet already. my point is like, I still don't think we know. I mean, maybe that's what you're waiting for, Mark, is somebody to say, this is what the world will look like in 10 years with high confidence.
Well, it's entrepreneurship. I mean, none of us knows. I remember like being at Accenture in 98 and like seeing like the internet technology expert or whatever there was like, oh yeah, look at this pilot of a medicine cabinet, and it's hooked up to the internet, and the pill capsules are communicating with the pharmacy and auto renew. And it's like, oh wow, that's so cool. That never happened. But like, imagine hearing the pitch for Uber in 1999. Yeah, I'm gonna like get rid of all the taxi services by getting regular people to take rides from other regular people. I mean, it's just like that. Who would?
We used to have intercoms in the house to like call other people,
exactly,
like in our house to call somebody downstairs in the kitchen. Can you bring some water? You would use the intercom. It was wild. Like now you just text.
I mean, that's why like entrepreneurship is so cool because like the way we live right now is not because that's the way it was meant to be or technology is possible. It was because that's why people like Elon Musk and Steve Jobs decided to make it that way. That's why entrepreneurship is so cool.
Yeah.
It is so cool. Do you think in person is a moat against? I just wonder if like events businesses. Obviously, I run a community business. It feels like one of my thesis is the digital world will become so full of generic noise, in the form of blandly written ChatGPT, SDR emails, and digital avatars interacting with you, that people will crave authentic, meaningful in-person experiences. But I haven't know if that's true.
You've
Maybe
been thinking a lot about it, Sam, because that's your domain. I haven't thought much about that at all. I mean, I've done a little bit of like work with the Meta team and like what they're doing with the Quest and how that could impact things. Like, I don't know. I haven't thought about it, Sam. I just, there's on one hand, there's an efficiency thing that I think is against like an in-person argument. On the other hand, I think there's like a health and wellness thing. Like, I'm sure there'll be plenty of psychological studies about like how happy and like not depressed people are who spend more time in physical proximity of humans as opposed to on a Quest or like whatever in this situation. But I don't know.
Mark, given your like the AI seeing all this firsthand in the last 12 months, and some of your portcos are a little earlier than others, they're thinking about their go-to-market fit and that team and that profile of the team. What are you advising them in terms of like how to go build a team today? Like, what does that look like and feel like? And is it different than last year, or is it similar to last year? And it's similar advice.
It's pretty close to similar, just because I haven't seen like the consistent pattern of like AI working. So it's like it's not like, hey, don't. If the advice used to be like, okay, let's hire 2 AEs every other month and 1 SDR every other month, the advice isn't that different than today. It's just that like, let's test AI in conjunction with the other tests. Just like we used to do like, okay, let's hire a content marketer to see if we can get an inbound going, and let's hire 2 SDRs to see if we can go outbound going. It's also like let's also test AI to see if we can get that kind of motion going. And you don't know which one's going to hit. So we're not quite there yet, and I can't wait till we are. But I'm not giving that advice right now.
Well, something that I'm thinking about and seeing is that a lot of startups are very gritty. They're doing growth hacking things with different tools that are out there, and it doesn't feel like that they're sharing what's working and what's not. And maybe by design, it's like almost a secret sauce aspect of it. I haven't been in the right channels to
same with me too, AJ, because like I have 45 portfolio companies that would tell me, in addition, like probably another 30 in Catalyst. So I think they would tell me, and I haven't heard much. I think we've got like you guys, probably about half a dozen are running successful AI campaigns today.
I'll kind of go through it with the board, but we're doing some interesting campaigns. We're doing 5 to 10, maybe 15 demos on just pure outbound. But like we've basically recreated on some part user gems, which is like who are their customers using AI, who are customers that are no longer at their companies, and then sending automated emails and personalization. And obviously Clay's a part of this, all of our other automation tools. So we've kind of like hack together this framework playbook, we don't know if it's going to provide consistency or sustainability over time to be able to make that repeatable. I think there's just all figuring this out.
Yeah, but that's the fun part, right? Like, it's kind of where the edge or the alpha is in having to hack together some stuff right now. Like, we've spoken a bit about data enrichment. To get data enrichment really right, there's not an off-the-shelf solution. Like, we've spoken about Kyle sharing his approach to this, selling into the restaurant industry. There's no off-the-shelf solution that he can buy. And so the alpha in it for him is hacking together 5 different things backed by AI to give them 90% data accuracy. And the competitor can't just go and pick that off the shelf and buy the same thing. I think that's really interesting in terms of where we are in the cycle. One of the things that earlier stage founders have been talking a lot about is this, there's the innovator's dilemma with the larger organizations that we're all aware of, right? This one seems a little bit different, right? Microsoft has had some good wins on the AI front. They've benefited from it, and they've taken a very partnership type of approach to it. I think they're the number one investor in the world for AI right now, from a venture perspective. So it's interesting how that plays out. We know the pros and cons of the larger companies. The con of the smaller company is the data. And it is, Mark, you've spoken about how data acquisition is something that these startups are a muscle that they're going to have to develop and flex. Is that a muscle that the startup has to develop and flex? Is that a muscle that VC firms should be developing internally and saying, okay, if you take our money, we've developed this data consortium, let's say, you get access to it and you get access to it. How is your thinking evolved on this concept of data acquisition? Where is this at?
Yeah, I think it is critical. I have spoken about this, in the SaaStr speech and then beyond, which is, this is a piece that's really different than the internet, adoption.
Yeah.
Was like, data is a cornerstone of this, and access to proprietary data that's high quality. So I just think this becomes an important function in the organization. It probably sits in like biz dev or something, but like that becomes pretty important. And I think it's an important part of your strategy too, is like, just like we talk about building a sustainable moat and what's your TAM, another big piece is going to be like, what is your data strategy? Like what data do you have access to that no one else does? Who else has access to, like, what's proprietary about it, et cetera. And so the implication for that is, I do think there's a function that is hired early on in an AI company within this that we don't really understand yet today. I also, when I look at these plays, you're stacking the deck in your favor if you're attacking a use case where the algorithm that fuels it, the data is not owned by the incumbents. Okay, so like, if we look, let's bring it to life an example. Let's use sales tech. We're all, talking sales. Yeah. Okay, SDR Copilot, Salesforce, HubSpot, SalesLoft, they have it. Data, okay? AI forecasting, Salesforce, HubSpot, Clary, they have the data, okay? AI sales coach, that gets interesting, okay? Because basically to build that, you need millions of hours of a manager coaching a rep and the outcome of that coaching. Who has that?
Oh, there's that firm, Sam, Replays. So there was a services company that was doing this as a services play, actually, Mark. And so they would basically, I think, just work with Gong customers mainly. And it was like, oh, you have the recording, but we're going to give you the coaching. But now when the AI thing came up, they're like, we have all this coaching stuff, data that we've been holding on to. Let's combine the two and productize it. So it's this unique thing that this services company had, but there wasn't a product company in the market that had it, right?
So that's interesting, right? Like, if you're an entrepreneur, like what are the use cases that are super valuable that the incumbents don't have the data? You're stacking it in your favor. There's a little more of an equal playing field. And the other thing is, like, what are some super boring legacy companies that have really valuable data but could never attract an engineer? Credit bureaus, grocery stores. You know what I mean? Like these, and like, do these businesses, businesses in the future, in the next 10 years, is the business of licensing that data to AI companies a much bigger business than their current business today?
But this is why I was asking you if this is a muscle that the VC
yeah,
firms should
that's
develop
interesting.
as a differentiator. Right. As a differentiator for themselves, but also because if you think about a startup, right? Like you think about people that are trying to build AI technology, a big chunk of them are first-time founders early in their careers. One of the reasons why you shouldn't try to build for the enterprise is it's really hard as a first-time founder to figure out how to sell to the enterprise. A data partnership with a large credit bureau is analogous to enterprise sales in some regards, right? Like they'll take so much of your time and get you pulled into so much bureaucracy that they'll slow down the rest of your progress. Is this something that the venture firms can actually do for these founders?
That's actually, I got to think about that. So that's actually interesting. Because like my head goes to, can you think of anything else they've done along that we could learn from? Because they've tried, right? And like even OpenView has like a huge staff. A16Z has a huge staff relative to other. So they've tried to provide certain, like, and it's worked for them. A16Z, it's worked for both of them. They're good firms. Like OpenView had fell apart for different reasons.
We don't know actually if it worked for.
You're right.
A16Z.
I mean, it's still like they had some good.
They're great at raising capital. We don't know if they're good at.
Yeah, I think the
return.
first couple ones were, but like I don't know on the others, Sam. And like, they can definitely get into deals.
They're more like a capital aggregator venture firm, though. So like you have to look at them with a different lens. Like you can't compare their returns to Union Square Ventures, because Union Square takes a sliver of the capital that they take, and so for an LP, it actually matters that you're willing to be able to take so much capital, and you give me what is a reasonable return for that size of capital. I think it's a different type.
Yeah,
of
it's cool. It's a cool idea. I'd never thought about it. I got to go think about it because I'm just like, what would I go do? What I'd go out and form the relationships with the credit bureaus and D&B and like, but then like I have to go find the entrepreneur that validate, like it's going to build on top of that.
Thesis driven, right? So it would be like, here's some areas that I think AI is super interesting in. Here's like the theory ventures, like thesis driven approach to here are my areas, and now I'm going to create the data where stats over there.
One area, Mark, you do have you have a close relationship with MIT. Like MIT, it's not a credit bureau, but they have a ton of data aspects of it. I think a big part of this is just like, if you take those institutions and they're very protective of
maybe. And they have their own like technology and licensing offices that could take advantage of this. And, but I don't know. It's interesting. And the other thing, the other counter arguments aside, but it's a great idea. And I want to think about is, I have been burned when I have an idea. We have to remember as an investor, you're an investor, you're not the entrepreneur, right? It's like a lot of investors have been burned when they had a thesis and they had a discussion with the entrepreneur and the entrepreneur kind of like, oh yeah, we could do that, and like they're not fully sold into it. And it's like, and then you get excited. Like you really have to like not lead the witness and like the entrepreneur's job is to create the vision and those opportunities, and we have the capital, and we need to determine who to build. But like, it's a really cool idea.
What about as you think about this middle growth stage right now, right? Like you guys have these funds where you have companies that are now at the Series B and C stage. When I look at that stage, without any naming companies, it's a little bit uninspiring in terms of what the integration of AI has been, even in these go-to-market tech companies, right? And it's Copilot-y at best. It's just very basic. Have you seen anyone really do something cool at the Series B, C, D stage, like a company that wasn't an AI-first company, but understood the opportunity, implemented it in an amazing way, is seen some benefits of it? And your general thoughts on AI and that stage?
Not really, nor have I looked at it that closely. My general perception is I would expect that to not yield much excitement because, again, it gets back to my comment that the AI technology and companies that would help my portfolio accelerate sales and product development this year are not the companies I should be investing in. And I think that's the big company mindset too. I don't think they're thinking about earnings in 2029. I think they're thinking about next quarter. And if you want to drive next quarter, Copilot's beautiful. I think all of their roadmaps are like, what can we build in the next quarter that's going to drive revenue in 2024 and 2025? And that's where you get into trouble.
Are you seeing any innovation around pricing? There's also like this theory of like non-seat-based pricing, usage-based pricing, obviously cheaper, but maybe, and it also, there's this long history of people, especially investors, especially bankers, saying you need more recurring revenue. But is there a movement away from definitionally contractually recurring revenue towards more transactional revenue, simply because that's how maybe
I think it's happened well before AI. I think it's just how you call it, consumption pricing, transaction pricing, and I believe greatly in it. So to your point, like a couple comments there, Sam, is like, first off, I think seat-based pricing is a potential innovator's dilemma for all the current sales tech incumbents.
Yeah.
You know what I mean? If you're working on a large CRM incumbent today and someone's like, I'm going to build the tech that's going to get rid of like all the support people. Like, what impact that would have on their revenue? So it's like, there's an innovator's dilemma, right? Specific to them and perhaps specific to like some of the DevOps, incumbents that also have seat-based pricing. But I think like the consumption pricing is fantastic. I encourage it for a lot of reasons. Early on, I love it because we're not solving for the banker yet when we're going from seed to B. We're trying to understand product market fit. We're trying to reduce friction to buy. We're trying to keep our North Star aligned with customer value creation, not like top line revenue growth. And consumption pricing checks all those boxes. And I think what's cool about consumption pricing is once you get to C, D, and E, when you do have to package this up for the public markets and they are going to care about predictability and long-term contracts, you can do like an AWS play, which is, I think, one of the first and most successful consumption prices, which is like, hey, you use like, 350 CPUs last year. You're projected to use 425 this year. Why don't you just prepay and I'll give you a 10% discount and then we'll check in August to see if you need more. That starts to feel really like a SaaS contract, even though it's consumption pricing.
Yeah,
right.
No,
so like,
it's a very obvious answer.
That's where I'm going with it too, which is like a lot of people focusing on the contract structure as opposed to what's the buyer's behavior. The buyer's behavior tells you if it's recurring. That's the deal.
It's also really interesting from a sales storm perspective. Like Snowflake would basically have the AEs forecast per account and commit to the forecast, and then hence the rolled up forecast for the territory. And it was very like person and territory or vertical specific, which I think is more nuanced than every AE is going to have a 6 to 10 times OTE quota, and let's just do it that way. I think it's really interesting from a sales storm perspective.
Well, Slootman talks about this. He's said this on earnings call that they had challenges forecasting all throughout the years because of that model.
But once you develop that muscle, it's a good muscle.
I mean, he did. It was one of the first things he changed, and it's in his book. It was like in the first 5 pages, he talks about. Well,
what is the answer? Because JJ, you're a great person to talk to about this. Like, I don't have a good answer of like, okay, cool, I buy your consumption pricing strategy, but how do you comp the rest?
Let me put that for a second to the side, because it is quite complicated, and usage based and consumption based is challenging. We do a lot of comp plan consults. It's the right pricing model. It's a very challenging implementation for a sales team. But to the point both that Sam made and Osid was around like these scaled companies implementing AI. Let me use a real example. Slack AI, or either any of us using Slack AI right now? They just rolled it out.
Probably.
It's $10 per user per month. We just started it. It's terrible. It's awful.
That's also very expensive.
Very expensive. And that's my point. It's per user pricing. I think about the $500 per month that I'm trying to find the use case, and like, you can't talk to it or anything. And so Salesforce is like, in my opinion right now, bungled the rollout because it's not useful. So I am like, hey, what other tools are out there that are like this? So Unleashed, Guru, I'm like actually kind of interested in the industry, in the category of like having like this master brain thing of all of these things and finding all of our documents, but it is definitely not Slack. And Guru, I think it's Guru, I might be wrong, does think about it in a consumption-based model way. And other tools like Mode, our BI tool, consumption-based, like end of the month, we hit our consumption base at the end of like 5 gigs and we need another 5 gigs. And at the end of a quarter, am I going to be the CEO to say, no, I can't use my BI tool to refresh my data? No, of course not. Like that's the whole point. To the question on sales compensation, how do you do it is that you have to build in some level of standardization at the very get-go. Not all companies do platform costs because I don't like that either. But you have to just ultimately say that, hey, as a rep on the logo, on whatever it is, getting in the door is the most important thing because we're going to create value after that. You comp on that. You comp on that very beginning of the user journey because the product does the rest of the work.
That's good.
But the way Snowflake does it is it's territory specific. So if you're an AE in a new territory, you're comped more on bookings. If you're an AE in a mature territory, you're comped on usage.
It's a very complicated, sophisticated business.
So what Slootman did was he went away from a traditional SaaS comp plan to this usage-based comp plan. And it has its nuances and trickiness to it. But I think it is the better approach is you actually sit down and look at the maturity of the vertical or the market that you're selling into. And you decide the first gate is this a mature market for us or not? If it is mature, bookings is a priority. Let's have a comp plan that drives that behavior. And if we are selling into financial services, that was our first real big market, we have the accounts. Now it's about AE. What's your forecast on this? And there's some rules around it, but it hasn't worked badly for them.
But Austin, I've talked to enterprise AEs and VP of sales from Snowflake. They will tell you back in their heyday, 2018 to 2021, 2022, it was the easiest sales job they ever had. They didn't have to do much of anything. And it's because of this very issue where you actually incentive. I mean, they were great sellers. They were the best sellers in the world. They didn't have to lift a finger. Why? Because the product did all the selling itself. So I think it still falls apart when you really
aligned to the product market fit was remarkable, right? Like that was an exceptional level of product market fit. But you have to separate from that and say it's easy for any seller to sell something that customers really want, right? Easier. But was the comp plan designed the right way to direct the right behavior from the sellers? And it's not that it was a misdesigned comp plan with amazing product market fit. It seems like they got the comp plan academically correct, at least, and the implementation seemed to be fine as well. And it was amazing product market fit.
They had success. But let me just talk about a couple frameworks to throw it out there on this, because I think it's really cool to innovate on this with you guys. Obviously, if two reps sign up the same number of customers in Q1, and at the end of the year, the first rep's customers have consumed twice as much than the second reps. If those reps are paid the same, I don't know if that's cool, right? Like there's probably something that the first rep did that sets expectations, finds the right customers, whatever. So we have to figure that out. At the same time, we psychologically know that you want, when a rep has a win, you want them to feel that win in their paycheck as soon as possible. And when they have a loss, you want them to feel that pain in their paycheck as soon as possible. So that's hard. And then the other piece is the sit on the beach syndrome that I think AJ is pointing out, which is we can't just pay 5% on all future consumption because these reps will be making $1 million and they don't have to work, right? So let me throw out something to play with those, which is a gated comp. So it's kind of let's just say, for example, that we want the reps to acquire as many new logos as possible in a quarter, but we also want them to tee them up so they consume the most in the long term. So what we do is we're saying, okay, you're going to make 2% on all the new consumption from your install base in the quarter. But if you sell 4 new logos in the quarter, we'll bump that to 4%. And if you sell 8 new logos in the quarter, we'll bump that to 6%. Does that get the best of both worlds?
Love it.
It's good, except in a mature market.
Totally
right?
changes. I agree. Totally agree.
Microsoft can't do this because Microsoft will be have all the accounts.
Right. I totally get immature because I don't deal there, right? So that by then I'm exited. I'm good, right? So I totally agree with you. We're talking startups where I think it's a little harder. And
I think for startups,
when do you pay the month one, whatever their usage happened to be, or do you do it on some kind of lag?
I think it's when it happens, Sam. It's real time. It's literally I've been here 3 years and I've accumulated 47 companies. And in the quarter, it's how much new consumption have those 47 companies done? and I'm going to get 2%. Now, of course, we have to run the math so these reps aren't making like
new consumption over their previous
right.
baseline.
So it's like their expansion.
And if they shrink,
maybe it can be negative, right? These are the details. Yeah, for sure. It should.
The thing we're discussing, so my brother is a big wealth manager in New York, and it's kind of the same problem that they have, which is a wealth manager comes in, builds a book of business. The book of business gets large enough. It by nature expands because their customers are becoming richer and doing better in life, right? You start working with them in their 30s, the average income is increased, so the book of business is increasing.
It depends on who they're married to assume that the assets grow.
He goes after Pakistani Indians, we have low divorce rates, and so it's good. And so then what ends up happening is they stop focusing on new business. And so this gated model would actually work really well for him. I'm going to take it to our wealth management business.
Yeah. Well, we're coming up on the end of the episode. Speaking of exits, I have to ask you this, Mark. And I know there's a plead the fifth answer, and that's fine. But just curious on the Google HubSpot things. We've talked a little bit about
nothing,
it.
That's a good question.
Yeah, I can comment on it. I know nothing.
Let's pontificate.
Can you theorize like why would Google be interested?
I've
in
asked some people. I haven't talked to HubSpot about it, but I've talked to public equity analysts and data. It's just like all the big four are just trying to find data. You know?
Yeah.
That's fascinating. That's not what anybody has hypothesized that I've heard.
That's different than what I've heard too.
I've heard it's like connecting the ad platform to marketing automation and CRM so that you can have like an integrated solution for that didn't feel
I mean,
right.
Google Ventures was a Series D participant in the Series D. I don't like we talked about it then. It was Rich Miner, great guy, co-founder of Android, I think. And like I did think he was just trying to he thought we were a good company and wanted to make some money, and there was some synergies with some things, but it was always difficult to say, even HubSpot being a $30 billion market cap business, is that a big enough, market for Google to care about? It's crazy to think of how successful they are.
Right.
And so, it's a hair scratcher,
I see it. Google's had some challenges acquiring companies as of late, and they've run into some issues. So they've got to look for somewhere, but I definitely think it's interesting to see Microsoft and Google go head to head in more of a B2B play.
Yeah, the Microsoft thing, I asked Dan Shapiro who's the CEO of LinkedIn, and I was like, I always wondered, because I remember when we were building the CRM at HubSpot 10 years ago, we were like, at the time, the secret to the CRM was keep the rep out of the CRM, bring the CRM to the rep, right? So where's the rep? They're in a browser. It wasn't Zoom then. It was more like GoToMeeting, but they're on some sort of web communication. They're on a phone. They're on email. That's where the CRM should be. And they're in social media, right? Doing they're on LinkedIn basically. And I was always shocked. You look at Microsoft owns LinkedIn. They have Edge, not necessarily the most common, but in certain circles, big market share, obviously. They have they have Microsoft Dynamics and they have Teams. They have all the pieces.
Teams.
And they've never put them together.
Teams,
and I was like, damn, why? It's not a big enough. Even though CRM is a huge market, it's not for Microsoft. So.
Wow. It's your point on the HubSpot Google acquisition is so fascinating, because if you look back to when the news came out, the market was quite bearish about it. And the view of many analysts was that your biggest problem as Google right now is your execution on AI. This would be your largest acquisition by far. I think 2 or 3x the size of the largest right now. You can't get a lot of acquisitions through because of regulation and all of that. And so this is the one you pick. This is the one you pick is this thing that seems like and the reason for it seemed to be what Sam was saying. That was the read the market had, but the data they were saying instead, why aren't you acquiring Perplexity or something like that, which is a great tool. But this makes a lot of sense.
Even the data comment,
it's interesting.
Does it make sense? It is perplexing to me, honestly. It's as someone who again has no information inside, but as someone who's spent 10 years on the inside, having the discussions of who an acquirer be and why, it's perplexing. Yeah.
Yeah.
Interesting.
Wow.
Well, Mark, this has been awesome. We usually only have guests for 30 minutes, and you lasted the whole episode, so we didn't kick you out.
Well, thanks, guys.
The important part. We have wins of the week and shout-outs, though, that we probably should get to in the last couple of minutes. And Sam, do you have one you want to?
Oh, my God. I've been thinking the whole time. And all right, I'm going to give a shout out to Mark for coming on the show a second time.
Sam, that's so weird. That's so weird. Take a minute, think about it.
It's horrible. No, I've been thinking about it for 10 minutes. And I'm like, I was looking at my calendar. I'm like, maybe somebody's in my calendar. I'm like, I can't find anybody.
So he looked at the square right below him and said, Mark.
So I know, but I mean, we've had a lot of guests on the show, but there's a certain kind of dynamic that happens when somebody's willing to share the mic, share ideas, brainstorm with us. So I just appreciate you coming on.
Thanks, guys, for having me.
That's my shout out. Now you do a shout out, Mark. You shout out.
AJ had a great quarter. Woo! Nice job.
All right, today's shout outs are only inside these four
I'm actually, I'm going to buck the trend. So Austin, you don't get a shout out from me. But I'm going to give my shout out to Hayden Safford, who is a stage 2 LP, president of Seismic. Hayden and I are both redheads. We both have 3 daughters.
Redhead?
I would say
your face has red hair.
Red face. Strawberry blonde. I'm not as gingery as I used to be, I guess. I don't know. But I would have met with him once a month. He's just awesome to bounce things back on. We talk about benchmarking of go-to-market teams. He's fantastic. And I believe he'll be in Boston in May. So excited to catch up with him. But Seismic, I know because the CEO is LP too as well. So like you have Doug, who I think just did a stage 2 event as well last week. So shout out to Hayden.
Shout out to Hayden. Okay, I'll end it with a lot of people that listen to this podcast used to really love All In. And it was because there was this insider knowledge that you would get from them, especially in the first 50 episodes, where you would understand the thinking of investors and these high-level operators. That was really useful. And they're still great, but there's a new podcast that's only 8 episodes out. It's Brad Gerstner and Bill Gurley. It's called BG2. And I think we're just lucky that we have this type of content in the ecosystem. It is genuinely amazing. It is high quality out of the gate, which a lot of podcasts, you build quality. It's high quality out of the gate. There's true analysis done prior to coming in. It is extremely insightful and interesting, and something that if you enjoy this podcast and you liked All In, especially the early All In, you would find that interesting. So that's mine.
Awesome. Mark, thanks so much for being on the show. We'll see you June 6th for CRO Summit with Pavilion in Boston. It's going to be awesome. And AJ and Austin will also be there, if I'm not mistaken.
Yes, we'll be there.
All right. We'll see you then. Thanks.
Bye, everyone.
All right. And that's a wrap for today's episode, brought to you by SalesLoft. SalesLoft helps revenue teams take the right actions to close every deal with the only platform built around the seller's day. Visit salesloft.com to learn how the world's top revenue teams hit their number by using SalesLoft. Thanks for listening to Topline. New episodes come out every Sunday. If you like what you heard today, subscribe so you never miss an episode, leave a 5-star review, and share it with your friends. Don't forget to join our Topline Slack channel to connect with us and discuss the topics we cover with other listeners. Click the link in the show notes. Lastly, if you're interested in joining Pavilion, you can learn more about membership at joinpavilion.com/membership. Thanks again for listening.